Hey there, it's Michael here from B Ninjas. On this video, I'm going to talk you through the basics of how to build out a cash flow forecast for the next 6 to 12 months. Why should you do a cash flow forecast? Very good question. It's a way to plan for the future. It's mapping out the cash inflows and outflows of your business for the next 6 to 12 months ahead. And in planning for the next 6 to 12 months, it almost becomes a project pipeline exercise where you actually try and see what's coming in, the commitments that you're going to make going out. So it really gives you a roadmap looking forward that the other financial statements don't really give you because they're historical financial statements. They're looking backwards. It also helps you predict any potential problems, and you can do things like scenario analysis to imagine the best case scenario, but also possibly the worst case scenario. And maybe you've got a tough period coming up with a drop in revenue. You can work out the levers that you need to adjust to help you get you through this period. So that's some of the benefits. And if it sounds like this could be handy for your business, and I believe it should be useful for every business, stick around and I'll talk through how to use one. Cheers. Okay, so here we are in a cash flow forecast. Now, these are all fictitious numbers, and this is just used to illustrate how it might be able to help. The key things that you need to be inputting into your forecast, if you're building one out yourself, is your beginning cash balance, which is this cell here that I'll highlight in green. That's your starting position of how much cash you have in the bank right now. Normally, you map out a cash flow forecast on a month-on-month basis, but for some businesses where things move quickly, you can do week to week. But for the purposes of simplicity, let's just have a look at a monthly cash flow forecast right now. So you begin with your opening cash position. And in this particular template, all these numbers up here are automated. The things that you need to be putting in are all of your cash inflows and all of your cash outflows. Now, this isn't when you invoice. This is when the customer actually pays you and you get that cash in your bank, because that's really important. The timing of when the cash is going to hit your bank can really make a big difference, especially if you've had a couple of lean months and then you've got some big expenses coming up. That's when you can have a cash crunch and things can possibly get tough for you and you might need to rely on debt. So we really want to minimize your reliance on debt or other short-term financing by planning for the future and making sure you've got cash in the bank to meet your commitments. Cool. So cash receipts or cash inflows. I'm sure we all know what this is. This is your revenue. So you can split it out whatever way you like, by product line, by product area. Cash sales, you could be collection from other areas. You might be having loans repaid from other areas as well. So those are some of the areas that you should be entering. When mapping out your revenue or your cash inflows, don't just predict that things are going to be going up forever, because they may not. Have a think about the seasonal fluctuations in your business. Do you have some leaner months? Think about your current customer bases. Do they have any contracts expiring soon? So go walk through month on month for the next 6 to 12 months ahead and work out the detail of how much cash is realistically going to hit your bank. And this might inspire some good conversations for you to check in on your customers, see how they're doing, see if they want to extend their contracts, see if they want to upgrade to other products or services you offer. So this is a great way to map out those cash inflows ahead. And then on the flip side, cash paid out or cash outflows. These are your expenses. Line by line, again, so rename all of these lines. I usually recommend doing it in the same format as your profit and loss, and putting down all your expense codes. For simplicity's sake, don't put every code. Maybe try and summarize some of those expense codes into an easier to understand, because the cash flow forecast should be simple and it should be easy to read, easy to understand, because you want to be able to glance at it and see what's going on in your business. So for example, you can see I'm not using decimal points. We're using whole numbers. We're trying to summarize some of those accounts to make it easy to understand and intuitive. So once you've plugged in all of your expenses, then you roll it out moving forward. Now, some tips with helping you roll this moving forward is that the trend is your friend. You want to be looking at your profit and loss going back for the past 6 to 12 months and see how things have been going, both on the revenue and the expenses side. You want to kind of monitor, okay, have things been going well for sales? Will they continue to go well? And similarly for expenses, you want to see if costs have been climbing or shrinking. And this is a great way for you to actually say, hey, these expenses have been climbing. The wages costs have been climbing a fair bit. We've made a few new hires, but our revenue hasn't. It'll actually start to make you dig into your expenses line by line and say, do I need to be committing this money ahead? So it's almost a performance review as you do this cash flow forecast. It's not just for one purpose, it actually expands and it gets you to look at your numbers on a monthly basis. I should note, you should have your bookkeeping up to date before you start doing this, because if you're looking at your historical figures without any solidarity in the data, then the decisions and the trends that you're looking at are incorrect, and moving forward, it's not going to make any sense to you. So, for example, if the wages cost is not fully represented and you've been entering your January wages cost in, and it's not actually based on reality, you're moving that forward in an incorrect way. You see in this template, and this is the template I use when I run through my clients doing a cash flow consultation, which I'll pop a link in below if you'd like to book one in. And this shows a nice little handy graph of how the expenses go over the 12 months, which is really handy. So once you've done your cash inflows and your cash outflows, you need to sense check the next 6 to 12 months ahead. Make sure if you're predicting a boom in sales, you might need to be making another hire, a staff member hire. So for example, in this February month, we've got 30 grand of cash sales. Do we have enough wages budgeted in to actually deliver those cash sales for the next few months? You need to start thinking about that relationship or the key drivers of your revenue and the key drivers of your expenses and how those two are related. Another tip for the expenses is to keep in mind for any annual expenses that may only pop up every 12 months. You know, some people have a 12-month app subscription that pops up every 12. Make sure you're putting that in. Capital purchases is another key line that you need to think about. Do you have to perhaps purchase a laptop coming up? Have you got any big investments moving forward that you need to make? When are you going to make that purchase? So that's another key area that you should be thinking about, as well as things like your tax debts. Do you have to enter in an income tax payment plan? So these are some things you need to be budgeting into your cash paid out that may not already be included in your profit and loss. So your profit and loss is a good starting point, but you need to try and think of everything that might be going out the door. Now in this template, you can see January, February, March, we go well, but this red figure here is when we run out of cash. So that's when we haven't had enough revenues to cover our expenses and we start to go backwards. You can't have too many months in a row with a red column, because that means you're going backwards and you'll eventually run out of cash and go bankrupt. So this means this is exactly when you need to be planning and saying, you know what, in April, okay, we need to start adjusting this because we obviously the revenue's dropping through the floor and we've got our expenses still sitting here at the same amount. So we need to maybe ask our staff to go down to 2 days a week until we manage to pick our sales back up. Or there might be some expenses that you could cut in order to help you with that as well. So in mapping out the receipts and mapping out the expenses, there'll be a whole bunch of stuff about your business that you start to see and helps you plan for that future ahead and actually adjust it, because you can predict these problems. In April, I can see I'm going to run out of cash. What should I do now if we're doing it in January? What should I do now to plan for that and adjust so I don't run out in April? So these are the kind of things that happen when you start doing a cash flow forecast regularly. So you should be doing it at the start of the month and update the historical figures or the actuals for the month that has just passed. So if we're doing this in January 2020, we need to make sure that at the end of January, we come back in here. So at the start of Feb, we update our January figures for the actuals and we see where we've differed. We work out, okay, I was predicting this in Jan, but this happened. What are those variances? So comparing the actuals to what you forecasted is really, really important in this, because it'll give you an idea of why were your predictions wrong. I'd recommend documenting your assumptions for the forecast. So perhaps add another template and say, this is assuming XYZ client stays with us, assuming we make another hire, assuming XYZ. And then when you go back the following month, you can have a look at your assumptions and say, actually, that was incorrect. And you can adjust and make sure you roll out that adjustment for the whole following 12 months. Cool. Those are some basic tips. I know there's a lot there, but I wanted to make this video value packed when you're building out your cash flow forecast. A few other basic tips. underestimate revenue. Be conservative with it. Don't think that it's going to go up forever. So make sure it's really based in reality. And maybe overestimate expenses to give you that little bit of buffer. Like I mentioned before, if once you've set up your template, maybe duplicate it and do a best case and a worst case scenario. This is called scenario analysis and is really, really handy. I do this with all my clients when we do a consultation, and it helps them map out what their best year looks like, but it also helps them plan for that dire situation and gives them that peace of mind that they've thought about that. No one's aiming for it, but it's that plan B that's nice to have in the top drawer just in case things do start to go pear-shaped. Cool. Again, make sure you're clear when the timing of it, when things are going to hit your cash in bank. Make sure you consider your tax debts. You should be updating this monthly. It's a living, breathing document. It's a forward-facing thing, and this is a really key planning tool for your business. So don't just do this once and put it in your top drawer and that's it. This should be done monthly, and then you push ahead for the next month. So you should always be looking for the 12 months ahead each month as you adjust. And then once you've done, again, your historical versus actuals, that's where you see the trends and you realize those predictions and why were you off. You start to dig into those numbers and you start to actually see the problems before they get out of control. You've got your finger on the pulse is kind of how I like to explain it. All right, hopefully that's some nice tips. It's never going to be an exact document and nobody has a crystal ball, but this is just all about trying to get it as close as possible to what we think is going to happen, and that's why I update it monthly and make those adjustments. So it's a really, really handy document, and I really highly recommend that every business owner in the world should be doing a cash flow forecast for their business. And if you want to get in touch and maybe let us help you get this done, and I provide this template to all of our clients once we have the consultation, and we provide that accountability to make sure they're keeping up with this. Get in touch. I'll put a link below in the video. And yeah, thanks for watching, and I'll see you next time. Cheers.